continuing to do well for itself now, up 54% this year and 20% in the last 1 month. Zydus, of course, 5.5% higher, set to consider its third share buyback in the last 4 years. Good time to get in a quick chart check as well from Sacchitanand Uttekar of Tradebulls. Sacchitanand, good morning. Thank you for joining in. This trend that the index has had of not managing to hold on to any form of gain, do you see this happening today as well? We are back nearing the highs of the day now at 23,560. But do you see any resistance at 23,500, 23,600? And do you believe that these gains will be given up? And of course, your stock recommendations for the morning as well.
Good morning, Hormoz. Hormoz, the week, the way it commenced with the gap down opening, this particular indication itself says that going forward, we may see the Nifty, spiraling downwards towards that 23,150, 23,000 gap area support. If you look at the last 4 trading sessions, yes, we have already seen a severe downside which unfolded in the Nifty. But if you look at yesterday's trading session itself, we did see a kind of a spinning top formation indicating indecisiveness in the immediate term. So if you look at the overall construct, the Nifty is still trending below its 5-day exponential moving average, which we believe that could provide the necessary resistance for the index. And on the higher side, we may see some exhaustion near to this particular level of 23,600. So ideally, we are recommending, building fresh short positions on a pullback near this particular zone itself. One should keep a stop loss at 23,640 on closing basis, and eventually we see that the Nifty will, scale lower towards 23,150. 23,000 kind of a zone in the coming week. If you look at both the major indices, Nifty IT and Nifty Bank, both are trending lower. Especially if you look at Nifty IT, we have already seen a fresh breakdown from a head and shoulder formation, which is again indicating a further downside of close to around 10 to 12%. So we are not expecting any major rally in the index as of now. But the pullback is something which looks, temporary, and we may see the Nifty, again scaling lower towards 23,150, 23,000 zone.
Okay, got that. Sacchitanand, would you like to call out any particular stocks?
On the short side, I think IT is something wherein the concentration should be there. If you look at the performance of persistent systems. Now, even here, we have observed a fresh breakdown from a head and shoulder formation. The pattern target is placed somewhere close to around 4,200. But from a trading perspective, we may see an immediate swing towards 4,450. Hence, we are recommending fresh short positions here, keeping a stop loss at 4,720. With the pullback, I think the ideal zone would be somewhere close to around 4650, wherein some fresh shorts can be deployed. The stop loss should be maintained on closing basis above 4720 for a pattern target of around 4200. The other stock which is on our radar is Dr. Reddy's. Now, if you look at the monthly charts, we have seen a very healthy consolidation. Recently, we saw the decline getting arrested near its 200-day exponential moving average support, which is placed somewhere close to around 1260. An inverse hammer formation is a rare observation, indicating that there could be a good, continuation of the up move. So here we are expecting that there could be, good outperformance in this particular counter. And hence, we are recommending building fresh long positions in Dr. Reddy. One should keep a stop loss at 1255 on closing basis and review the positions on a major breakout level, which is close to around 1340, followed by 1420 as a pattern target.
All right, Sacchitanand, thank you so much for sparing time joining us today with your views on the index, your stock recommendations, a short on persistent systems, along on Dr. Reddy's doing well in an otherwise volatile market. Speaking of the market now, it's now